Hello, and welcome back to FX Limit, where we dive deep into the world of foreign exchange and provide you with insights to navigate the ever-changing currency markets. Today, we're tackling a fascinating and critical topic. How can you analyze the impact of international trade agreements or tariffs on currency values using fundamental analysis? This is a question that not only intrigues seasoned traders, but is also crucial for anyone looking to understand the global financial landscape. So, let's get into it. First, let's understand what fundamental analysis is. In the world of foreign exchange, fundamental analysis involves evaluating a currency by examining the economic, social, and political forces that may affect its value. It's like being a detective, looking for clues in the economy that tell you where a currency is headed. Now, when it comes to international trade agreements and tariffs, these are the heavyweights that can really move currency markets. Why? Because they directly impact a nation's economy. A trade agreement, for example, can open up new markets, boost exports, and lead to a stronger currency. On the flip side, tariffs, which are taxes on imported goods, can lead to trade wars, hurt economies, and weaken currencies. So how do you analyze these effects? Here are some steps. Stay informed. The first step is to stay on top of the news. Keep an eye on economic reports, government announcements, and international news. This will give you a sense of the current trade dynamics and potential changes on the horizon. Understand the basics of trade agreements and tariffs. Learn about the major trade agreements that involve the currencies you're interested in. For instance, if you're looking at the US dollar, understand the US-China trade relations, NAFTA, and other relevant agreements. Similarly, be aware of any existing tariffs and those that are being proposed. Analyze economic indicators. Look at key economic indicators such as GDP growth, unemployment rates, inflation, and trade balances. These indicators can give you a sense of how a country's economy is performing and how it might be affected by changes in trade policies. Evaluate the political climate. Political stability or instability can greatly affect currency values. Understand the political context surrounding trade negotiations or tariff impositions. Are they likely to go through smoothly, or are there obstacles? Consider the global context. No country operates in isolation. The global economic environment plays a critical role. For example, if major economies are slowing down, even favorable trade agreements might not have as strong a positive impact on a currency as expected. Look for market reactions. Often, the market's immediate reaction to a trade agreement or tariff announcement can be very telling. Sharp movements in currency values can indicate how traders are interpreting these events. Use economic models. Some traders use economic models to quantify the potential impact of trade policies. These models can incorporate various factors like trade volumes, tariffs rates, and elasticity of demand to estimate how trade changes might affect a currency. Consider long-term effects. While immediate effects are important, don't ignore the long term. Some trade agreements or tariffs may have a delayed impact on a currency as businesses adjust and new trade patterns emerge. Keep an eye on sentiment. Finally, gauge market sentiment. Sometimes, it's not just the economic fundamentals, but also the traders' perceptions and expectations that drive currency movements. In conclusion, analyzing the impact of international trade agreements and tariffs on currency values is a complex but rewarding endeavor. By staying informed, understanding the economic and political context, and keeping an eye on both immediate and long-term effects, you can gain valuable insights into currency movements. Thank you for tuning into FX Limit. We hope this session provided you with valuable insights into the fascinating world of Forex and fundamental analysis. Remember, the currency market is dynamic, and staying educated is key to success. Keep following us for more updates and analyses. Until next time, happy trading.